What's up, everyone? It's your boy Looney, and today we're going to break down something that a lot of people misunderstand, and that's passive income. Specifically, the difference between selling options versus collecting dividends, and what no one really tells you about the timeline, risk, and reality of building income while you're sleeping. Let's get into it. But first off, I do want to do a quick shout out to the Discord community. It is free to join. And then I also have a premium version, $8 a month, which gives you options like a selling options course, one-on-one coaching, trade alerts or trade callouts. I do giveaways. I have some newsletters. It's $8 a month. You can check it out. All links to it will be in the description. But let's start with the dividend income, because at first this sounds amazing, right? You simply just buy a stock and it pays you every quarter. And you just simply sit back and chill. Now, while I'm mentioning this, let me pull up a stock that I own that pays dividends. So let's do Walmart, because I probably have the most amount in this portfolio as far as dividends for a position. Now, what people forget to mention is how much capital you do need. So let's say you want that $1,000 a month in dividends. If you're getting a 4% yield, which in this sense, you're not even getting that, you're getting a 0.94, you need $300,000 invested. And that's just to clear $12,000 a year before taxes, which is insane. And there are some higher paying dividends. I am aware of that. I know we have Reality Income, that is O. And this one is a lot higher, it's 5.5. And this is on the higher end. So dividends aren't usually this high. If you look at Disney, I believe this is another dividend, 0.8. It's usually around that 1%. And let's look at Google is another one, 0.45. So very small dividends. You're going to need a lot of capital to actually get a lot in dividends, at least monthly. Or a lot of these are paid quarterly, but I'm saying to get the required monthly that you're looking for, that $1,000 a month. So unless you're sitting on that fat portfolio already, it's a very slow game. And it does take years, and it is a very slow, but it is a safe process. It also compounds. So you could reinvest that into your shares. So I have that going on with Walmart. I stopped investing into it because I just see better opportunities. But you can see here, May 27th, I did receive that $1.11, and it gets reinvested. Also in April, I got it. So you can see it is reoccurring and it compounds. So hopefully it grows. Instead of being 1.11, it grows to 1.12, but still very slow. And it is safe. I said that already, but it is a safer strategy. A lot of dividend paying stocks are safe stocks. Now, let's just switch over to selling options. And this is what I advocate for. And not saying dividend investing is a bad strategy, because it is a great strategy. And as you can see, I do have my own dividend paying stocks, and that is more passive. There's not any management. So that's the pro of it. There's very little management of investing into dividend stocks. You just let it sit and it pays you. And you don't even have to reinvest it. It does it for you. So very passive. And selling options, especially cash secured puts and covered calls, many say it is passive income. Now, I would disagree with that, because you actually have to set up the trade, and depending on how much you go out, whether it's a month or weekly, it is a lot more management. And obviously you want to time it at a good time. So not as passive. And I disagree when many people say it's passive income. It's more passive than doing day trading, but I wouldn't say it's passive income. And with this, you're not just waiting on a payout. You are the aggressor. So you're the one that's outgoingly getting that dividend. These premiums you could consider when you sell a put or sell a covered call, you get paid a premium. So very similar to a dividend, you're not reinvesting it. You're not putting that money anywhere. You're putting that into your buying power, and from there you could do whatever you want. I could buy shares of Mara, but for now I'm just letting it sit in cash and just seeing for any opportunities. So that $39 I got paid upfront for doing this trade that is a month out. I'm locking up my cash for a month, and I got paid $39 to do this. And it's similar to a dividend. You're collecting money for wanting to own a stock. So what is better? What is the truth? And we're going to look at selling options. And the truth is options aren't risk-free. Now, this would sound great if I got that premium every month, every week, and nothing went wrong. In that case, I would double my portfolio. But the con and the overall risk when you're doing these kind of trades is getting assigned. Especially in a downtrend, you can lose money if you're not managing risk. So if I get assigned on Mara and Mara decides to go down to $10, I am down $200 minus the premium, so a little bit less than $200. And dividend stocks are a lot less risky. They're a lot less movement, and that's one of the drawdowns with selling options and getting that premium. Usually when you sell options, you want to do a high volatile stock that can give you premium that's worth doing, and Mara is one of those. I know it's a lot more riskier than most. You'd obviously do it on SoFi, which is also a risky stock, but that's the issue. When you're selling premiums and ones that are worth, you're doing it on riskier or more volatile stock. And another thing is you want to own the shares, and not only own the shares, you need to have 100 shares. When you do dividends, you could do $1, $10, and you could collect dividend. But with premiums, you need to be able to afford 100 shares. And what is the best mindset? Now, you're probably thinking, should I do dividend investing? Should I do selling options? Or should I do both? And really, that should just match your capital. So if you only have $1,000, you probably shouldn't be selling that many options. You should probably build a bigger portfolio, then get into selling options. Because if things go wrong with selling options, you might be waiting a while to actually realize that capital back. I am personally more of a risky investor, so I actually like selling options a little bit more. But at least dividend is more beginner friendly and you could start earlier. But selling options overall, you can get better returns than just simply investing into passive dividend collecting stocks. But essentially, both of these do take time. There is no truly passive, fast, and risk-free money. But what you can do is just be smart, be disciplined, and build income streams that compound over time. So you could wait for opportunities when the stock drops down a lot. You could sell a put at a lower strike, and it requires less capital. And if you get assigned and the stock's already trading low and it goes back up, you could actually realize a massive gain. Or you could sell call options, and you could constantly doing the wheel strategy, and it's a lot less passive, but it is a lot more aggressive, and you can earn a lot more selling options rather than just simply investing into dividend paying stocks that are a lot more safer. So really that's what comes down to is what kind of risk tolerance can you take? Are you a lot more risky and you want to just doing selling options, or do you want a safe, passive, compounding portfolio that just slowly grows over time? Then you would want that dividend paying. Or do you want a mix? And that's what I do. I do a little bit of a mix. I'm mostly selling options, but I do have some safe plays in dividend paying stocks. I actually stopped investing into a lot of dividend paying. I'm just simply doing Sony and Hood, but doesn't mean I don't have them. And Hood does not pay dividends. So this one is also a pretty risky stock. But overall, that's what I would say, is that you can do both. You don't have to stick to one. And if you want to help setting up your own strategy or want access to my own trades, like you could see in my options, you can hop in the Discord. It is free to join. And then for the premium, you do get that ability for my trade updates, coaching, and a full options selling course. Until next